This is Eric Muathe with Muathe.com. Let's take a look at a stock that has done well over the last couple of weeks. In fact, we can say it's an IPO in a sense that it started trading this year, as you can see right there. But of interest is what to do when you see a stock explode in price, as we see here. Now, the reason why this has been one that I'm watching for a new base, there's the close of the session. But again, what I was saying is the reason why this is on my radar for a future breakout is because of this explosive 3 days at the end of November. These are the types of moves that captures the attention of momentum traders. So the key is not to get caught up chasing. So we can see an instrument here that essentially doubled in price, so call it about 10 here, and in about 3 days went as high as 22.5, give or take. Now the key is the fact that it went up on consecutive days. Day 1, day 2 was an additional strong day, and then day 3 was another back to back daily gain. Because of those 3 back to back gains, it means that this might have potential if it can settle down and if it can break out. Now there's a couple ways you can play this. After this massive move, you can wait for some type of a settling action. So let's say it comes back here sideways and ultimately starts moving higher. So in theory, you can buy at the lows here, anticipating a future breakout. But the problem with that tends to have less momentum, and you're never sure really whether it's gonna break down. So from sideways, you might think it's gonna bounce, but it could break down. So sometimes it makes more sense for the market to show its hand. In other words, it makes more sense for the most part to wait for the next breakout. So in this particular case, we have the daily. Now you can see that the highest daily close is right there. So for first and foremost, we have to set an alert at about 22, which is where it closed on this big up day here. So that's breakout number 1. Set an alert, see what happens. The other option is to go to the next time frame, which is the weekly. Now on the weekly, we can see that the most recent weekly closing high is right there, and that's at about, let's call it 17 and 17.30, give or take. So about 17.3, which is this weekly closing high. Now that's your next logical breakout level. Now any breakout from now is legit because we've had 2 weeks of rest minimum since this weekly closing high. Remember, on the weekly time frame, we want to see at least 2 weeks of rest, right? And quickly, what that means is take this weekly closing high. You want to have at least 2 weekly closes below this close right here, at least 2. As long as they close below, it could be even higher on the second week, but as long as it is below this close, then that is 2 weeks of rest. Now what that means is that any breakout after the minimum 2 weeks of rest on the weekly, any breakout means that the stock is well rested and now could be setting the stage for another strong move. You need that rest period to kind of get your legs back together and for you to have enough power to move higher. Now, as I mentioned, since we've already had 2 weeks, any breakout above this recent weekly closing high is a legit level to watch. So the idea here is very simple. You don't have to watch this every day, but set an alert at some point. Should it clear that area, maybe you can set the alert a little bit lower. Let's say you can set the alert at 1690. Why? Because now you're watching it to see whether it's going to break out around 17.30. So sometimes set the alert, say slightly below your ideal breakout level. It could be 17.10 or 17 whatever, so that when it starts moving, when it starts getting some traction, when the market is observing its movement, when traders, momentum traders, are beginning to chase, and when it's making the rounds, and when it's sounding the bell that something is developing again, then you can take a closer, serious look. So when it starts gaining momentum, start watching it, because a breakout would be the ideal signal, the ideal confirmation of potential intention to move higher. So you can use the weekly closing high as the nearest buy point. Now there's another way you can do this, which is go to the monthly. And remember, we are still trading for the month of December. We are smack in the middle of December. But let's say we close down for the month of December. Then that means that any future breakout above November's monthly closing high, which is the close of last month, if it can be read for this month, it means that now it has achieved the minimum rest period. Remember, the minimum rest period on a monthly chart is 1 month. So if it can clear that, let's say after January, your buy point is November's monthly closing high, and that would be at a price in this particular instant of about, I'll call it here 1470 roughly, maybe a little bit higher, let's say 1480. But anyway, it's November's monthly closing high. In fact, why not just check it? All right, let's check this. So the monthly closing high here is at 14.89. okay, now so 14.89 is also a logical breakout level to watch. So you set the alert and you kind of forget it. The reason why you have to forget it is because there are thousands of stocks that are setting up to potentially break out. You can't watch all of them. The best way to do it is set an alert. Should it come close or should it break out above 14.89, that's your cue that this could explode. And again, the initial interest is what happened here. This is very, very telling, because why would the stock move so powerfully over a period of 3 days back to back to back unless there's something? So if there's something, well, it might break out again. If it doesn't break out, and this is the beauty of the breakout strategy, if it doesn't break out again, let's say go to the weekly and it never breaks out again ever. So let's say it never breaks out above that weekly closing high at about 1730. If it never breaks out, then you never mess with the stock. If it drifts and goes nowhere, you ignore it. But at the same time, if there is potential, let's say if this stock at some point is going to trade in the 40s, 50s, 100s, then it has to clear the recent weekly closing high. It has to clear the recent daily closing high on the daily, and it has to clear November's monthly closing high. Now remember, this is just one stock, so you have to do this for all the stocks that you think could have an upside. So it's a lot of tedious work, but if you you have to invest some time, some preparation work if you're gonna own the high flying stocks after some rest period. So yes, let's be honest, it's some work. It's not like you just you just find breakouts. Breakouts do need some continuous management of the breakout levels, as stocks are moving all over the place all the time. So that's why you have to set the proper alert and forget it. If it breaks out, good, now you have an interest. If it doesn't break out, then well, it's not gonna alert you, and you can be attracted to other instruments that are moving. Again, let me just finish one more. I need to emphasize this. The key whenever you're looking for a breakout is go back and check how it's set up. Was there power when it was moving? if there was tremendous power when it was moving, that's a sign that potentially there's something in the stock, some dynamics that could move it down the road. The only way to confirm strength is by a future breakout. Otherwise, we ignore. Here's an example. Here's an instrument that moved for a couple of months. This is a weekly chart. This is a weekly chart, but here's an instrument that had tremendous movement here. And just kind of keep this video short. Ultimately, there was a false breakout here. And remember, you're going to get false breakouts from time to time. But let's not underestimate the power of the next breakout, which is here. So again, not all breakouts work, but by timing breakouts, you avail yourself to the most powerful phase right here. Let me keep the video brief. Eric Muathe at Muathe.com. Love, light, light, love. Namaste.